hello. Good evening. Hello. Good evening, traders. Bit late today. How are you all doing? If you can hear me loud and clear, just put it in the chat for me. Okay, great. Good evening. Yeah, let's clean our chat today. Let's clean the chats. Let's see. Let's clean the chats. Remove the choice. Okay. Let's crack on. I hope we've been all great. We've had a wonderful time. Okay, loud and clear. That's great. All right. Let's crack on. Yeah. Okay, so I have on my screen here gold. Okay. So last week we had some moves that we enjoyed with the gold setups that we posted. Okay, so with gold, let's go back to 4 hour. Okay, let's start from 4 hour charts. Okay, so on Wednesday, I guess this is Wednesday. Let's see. Yeah, on Wednesday we had a news item that caused this seek and destroy kind of display here, where price was just moving, taking liquidity from the top, liquidity from the bottom, kind of thing. So we, after the news item, you had this lower session of the seek and destroy working on both sides filled. So now we are left with this upper part of the move of this wick to be filled. We are left with this to be filled. So and then last week, or on Friday, we had this move all the way to this point, to the body close of this candle, and then the market closed. So yeah, so coming this week, or when market opens this evening, there will be some pullback. It's going to be a pushback probably to this area, and then we head back to fill and take the liquidity resting above here, liquidity resting above there. So that is what that's one side of it. Or there might be just a slight retracement and then continue. So over here, let me make this clear. We doing a top-down analysis, and then we're also creating multiple scenarios, multiple narratives, that if this happens, this is what we are expecting. If this does not happen, this is how we approach it. So we kind of create multiple scenarios to see which happens, because I'm not here to predict anything. I'm not here to predict. I'm just reading the chart as it is there, and then I trade what I see. So we go through this to get these multiple scenarios down. So when price plays out in any of those scenarios, we know exactly what we aiming to do or what the plan is. So yeah, so that's how we do it here. So yeah, so that's on gold. That's what I'm expecting gold to do. So if we go down maybe 1 hour, so we know for all this time, we know that gold has been on a bullish run. We had the retracements tackling the internal range of liquidity resting around here. Internal range of liquidity resting around here, around this area. Let me put some sparkle in it, around here. Okay, so that is what gold came to do. We came back to sweep the liquidity resting around this area, and then we're making our way back to possibly continue the uptrend. So I believe once market opens, we hoping this gets filled, and then as it gets filled, we have some the liquidity resting above here. So that's what my expectation is on gold. Other than that, there could also be a possibility of price, first of all, coming back all the way to tackle. So we had this break of structure here, and then we can identify that there's a demand zone and also some imbalance here. So there's a chance that we could have price coming back to tackle this area before shooting up to the upside to clear this liquidity resting above here. So as we can see, we cleared the liquidity here, and then once we clear liquidity from one side, price most likely look for the next area of liquidity. So clearing the liquidity resting here, the next area of liquidity that I can identify after clearing the liquidity resting here, the next area of liquidity is this external range of liquidity resting above here. So that is why I'm kind of more of bullish bias. So we have this, let's mark this here. We have this here as our demand area. So attached to that demand area, we also have the fair value gap or imbalance, which makes our zone valid. So we want to see a demand area with some form of imbalance or fair value gap attached to it. So we had a break of structure here. We had a break of structure right here, picking this too. So we had the break of structure, or there's a change of character. So after this, we had another break here. We had another break of this high, another break. So that would be the break of structure if we're looking at this on the 1 hour time frame. So with this in place, the origin is where we have marked here. So if anything, we can be waiting for price here. If it doesn't continue to push up to fill this liquidity and take this high, we expect price to do this then continue to the upside, in any ways. So once we have put down these zones, you don't have to, ideally you don't have to sit and be watching your trade. You can just put alerts on your screen. You can put alerts, so once price get there, then you can go back to your screen and monitor, and then look for the entry setup, or look for our entry setup, and then take the trade. Okay, so this is on gold. So that's what my take is on gold for now. That's my take on gold for now. I still expect price to do this, to finish this up. Then after that we'll see what will happen. So again, if we don't get this push all the way down here, this is another zone. If we go down to 15 minutes time frame, we can clearly see that this is another area of consolidation. So we picked this last indecision candle before the impulse move. So we'll take it from here. The last indecision candle, we'll take this one as the. So these are the multiple narratives that we are building, and then wait to see what happens. So we are not predicting that this is what gold is going to do. Nope. We build multiple scenarios, and then whichever one plays along, we follow with it, we go with it. So we have this here, this area here. So in this area as well, we can also identify some imbalance right next to here. That's the nearest imbalance you can see on the 15 minutes. So next to this zone here, we can also see there's this imbalance, big imbalance here. So all we have to do is to wait and see what happens from here. We can see that we had a push up, price pull back, and then tried again, and then that's where the market closed. So we will just have to see how it plays out. So price could come back and fill these imbalances below here before continuing to the upside. So this area here is an area that we have to be very careful in terms of our entry, because this area could serve as an inducement. An inducement will pretend as if the price is turning away from here or reversing from this point. If it makes its way back to this area, it could act as an inducement area. So we have to be careful in areas like this, because we also have this zone below here. So price could target all the way down here, but once it gets here, it will kind of play out, do some shenanigans, someone will say, some shenanigans, giving indication that it's going there, and then it will strike going down to this zone. So entry here, I would say we should use confirmation entry at this level. So confirmation entry from this zone will be ideal. Looking at how it is now. So yeah, so we have to just watch and see what happens. So yeah, so last week, let me just go over this and then we'll move on. We are not hearing you. Oh, sorry. You're not hearing me well. What what's the issue? Let's see. Can you hear me now? Can you hear me now? Let me know if you can hear me loud and clear now. You said the volume is missing. All right. I've increased it now, so it should be okay. So let me know how. Okay, it's okay now. Okay, great. Sorry about that. All right, so okay. All right, so now as I was saying, that is how I look at the likelihood of things happening this coming week. But just a quick recap of what we did last week. So last week we had this zone here where price got here. So this is where we're waiting for price, and then it gave us nice setup from here to this area. So we took this trade in to this point here, and then when the US market opened, we had this reversal here. So this was the Asian session where price was more or less moving sideways after the Wednesday news effects or news drama, as we can see here. So this was all the news, Wednesday news impacts. So after that, it gave us this area of consolidation, and then we had a sweep of liquidity. So after this sweep, you can also see, if we look to the left, let me go to the 1 hour time frame. So if we look to the left, this also happened to be a zone. We had a break of structure right here. So the origin, we can mark it from here. Let's take it from, I'll take it from here to the, so this is I would say this whole zone here, attached to it is the imbalance. So this was a zone that we're waiting for price to come into, and then we had price playing out here, and then gave us rejection here. So we took the trade. Okay, that was a quick recap of last week trade on gold. Okay, so let's look at NAS possibly. If you want me to have a look at any other pair, please put in the chats. So it's, as we always do, it's always ideal to be patient in the markets, because patience is the key. If you are not patient and you don't humble yourself, the markets could humble you, and that is not a nice place to be. So we always have to be patient and then wait for price to be in the area or the zone that we want it to we want to take the trade from. So let's be on our guards. Okay, so this is NAS. Okay, so I've put some levels here. All right. Okay, so let's go on the weekly and see what's happening on NAS. Let me take out these lines. Okay, so this is much better. All right, so we have on NAS also making higher highs. It's in an uptrend. So as we can see, the weekly, last week we had this highs. This was the last week low, and then this is last week high. Okay, so that in itself give us a range to be working with. So we go on the daily time frame. We know NAS has been on a bullish run. It's making higher highs and higher lows, higher high and higher lows. Let me draw this. So from this point, higher high, higher low, a typical uptrend characteristic. A typical uptrend characteristic. Okay, so we can clearly see that this is what NAS is been up to. It's been up to. So if I lift this onto the side, you can see clearly how we've been making higher highs, higher low, higher high. So it's an uptrend. This is on the daily time frame. So from here on the daily, I said, you can see that we are in an uptrend. So on the left hand side, this NAS is NAS gold, NAS and all the indices, the three indices, US 30, SPY and NAS, they are all in an uptrend and making all-time highs. They are making all-time highs now. So there's no data on the left hand side to kind of help us to make further decision up as onto where NAS is likely to go. So I've taught this in the past before about these key levels, where if we look at it even here, we will see that there are some key levels that these indices kind of move from one key level to another. This level here, if I put a horizontal line there, if I put a horizontal line here, so this level here, we have 22.1. So if the odd 50 that I'm talking about, I'll only pick an odd number and then add 50 to it. So after 22, the next odd number is 100. So 100, and then I'll just add 50 to it, giving me 22,150. So all I have to do is to plot this on the chart. So plot this on the charts. Yeah, I know I'm giving another insight to what we can be looking out for. This is what I've identified on these pairs, so I might as well share it for us to be. So we can see how price came to this odd 50. That's, I pick the odd numbers and then add 50 to it. So this is a key level that price got here and then turned round. So that's odd 150. So the next odd number I could pick after 100 is 300. So 300 plus 50, that will give me 22,350. Let's put that line right there. 22,150. I mean, the next one is 22,350. Let's put this 350 where are you? Okay. So that is another level, even though this is on the daily time frame, so it's quite tight. So what I'm doing, if you go through the chart, you will notice that price got to these levels and then it reacted massively from there. So this is the next one we can put on here. 350 is 550. So so I will just I'll just select maybe what I can see here to be the areas that price reacted from on there, and then it will be in that same range, more or less around. It's a zone. So this area is 950, then odd number here is 900, so I'll just add 50 to it. So that is the zone. Take out this. Okay, so yeah, so we can see how price reacted, broke above or got to this 950 zone, and then held below here, broke above it, came back, and then acted as a resistance area. So if we go from 950, this area, let's see what this area is. This 950. So this is another zone. So this is 23,950 zone. So these are what I'm doing here. It's very important in terms of knowing the levels that you are trading to, or the levels you are trading from. So this is something that I've identified on these pairs. So currently, and so this one is 23,950 key level, and see how price reacted from there back to 22,950, and then from 22,950 we made our way back, broke above it. So from this point on, 23,950, the next odd number we can identify is 24,150. So from 24,150, the next one from where price is now, the next one we can identify is 24,750. 24,750. 24,750. So yeah, I know I put these weekly highs and then weekly lows lines here, but I just want to throw more light on this before I continue. So 24,750 is right here. 24. $24,750. Okay, so we have this, the next key level that price could target. So from this point on, from 750, we head to the next key level, which will be from 7. The next odd number is 9, so we head to 24,950. So this since we don't have any data on the left hand side, this is something that we can use to help us identify the next area we could be targeting if we take in a buy. So 950 is somewhere here. So on here it looks so close together, but mind you, this is on the daily time frame. So if we have a move from here to here on the daily time frame, it's quite a massive move. So this will be let's move. Okay, 950. Let me put this and then we can move on to do some other stuff. Okay. So this, let's move on to the 4-hour time frame. So this is the 4-hour time frame. So if we considering the distance from here to here, that's a quite a lengthy distance. depending on your lot size and what size of accounts you are trading with, it could give quite some move. So we can see how price reacted from this level, pushed down to here, then from here to here, close above, it came back to retest, and then making its way to the next key level. So as I said, the next key level is 24,750. From there on, we head to 24,950. So I believe this will help us in terms of targeting where we want to take our trade from if we get into a buy. As there's no data on the left hand side, this should be of great help. So if you go through the charts in the past, all these levels that price got there and stopped, let's put this one here, you know exactly what I'm so 5, this should be 350 area, 350 zone, 350 zone. So this 21,350, okay, so beautiful. So you can see how price got to this zone, was held here, and then turned round back to this particular zone again, and from here pushed up above, came back, and then see how before going up it just came back to tap into this level, key level. Another point was here, tapped into this key level, pushed up, and then we created liquidity all below here. We can see equal lows right here, and then before price took off, we have to come for the money resting here, or the money resting at this equal lows level. This is liquidity. So this is liquidity resting here. Stop losses, because if the traders who entered a buy here most likely will have their stop losses resting here. So before price took off to the upside, it came for this liquidity and took off. So if you, before you enter a trade, watch out for these areas that you have identified the liquidity zone, and if that liquidity zone hasn't been taken, don't become the liquidity yourself. Wait for the price, or wait for price to take the liquidity out as it did here, and then after the liquidity was taken, see how smoothly it took off to the next level, came back to retest, went up, gave us a second leg, and then after the second leg, and let's see this, as I always say, that we come on to this session here to analyze the charts and also learn. So over here we had liquidity resting here as well, and then if we zoom into this, before this push up, this took out the liquidity resting here. This is equal lows. So if I should put the low, or pick the low of this candle here, so that's the low. Let me zoom out from where we are. So I believe you can see it now. This is the low of these equal lows where liquidity resting. Before price took off, what did we do? We came back, took out the liquidity with this seek and destroy candle here. This pin bar came to take the liquidity resting here, and then after that we had straight push up. We had a straight push up from here. So once you identify equal lows, the next thing you have to wait for is sweep of liquidity. Okay, someone says BTC. Okay, we'll have a look at BTC as well. Okay, so we had this push from here after the liquidity sweep. So sometimes it doesn't matter how far it travels. Once it could be a pip below the liquidity area. So if you look at this one, we are on the 4-hour time frame anyway, so this could be a very massive push below. Let's see it on the 1-hour time frame. Let's see it on the 1-hour time frame, where we had this sweep of liquidity. So over here we can see it a little bit much clearer on the 1-hour time frame. So this is the equal lows that was created, and then after that we had this liquidity sweep before we took off. So that would have been a very nice sweet spot of entry. See how smoothly it took off after this push up. And this also happens to be the second leg. So this is the first leg of the push. We retraced to the 20 moving average zone, we came back, and then we did a sweep, this giving us the entry. So this would have been the entry area for this particular zone. This is on NAS. Yeah, so let's crack on with this analysis, but I believe it's good for us to learn from some of these things as well. The only way we can grow is analyzing the chart, reviewing our past, and then making better decisions based on that. Okay, so on NAS, let's see what we have here. So have we had a break of structure yet? Let me take out these levels, remove. Okay, so currently on the weekly time frame, as I marked earlier on, we just need to know the range. So I'll just put this there to help us know the low and the high of the week of last week. So we go to the daily time frame. This, as I said, we're doing this just to help us to have a multiple narrative, that if price do this is what we're expecting to do in our game plan. If price goes this way, this is how we're going to tackle it in our game plan. So that's exactly what we're doing here. Okay, so NAS has been on this bullish run, and we've recently had this break of structure. As again, this is on the daily time frame. So on the daily time frame, we can mark these areas and then further refine it as we go down. So this is a zone on the daily time frame. On the daily, we can see there's no imbalance next to here. Looking at it on the daily, it's all efficient markets all the way up until here. So it's all efficient, there's no imbalance along this way. So if that's what we have on the daily, price has no business doing here but keep on pushing up. Yeah, we've had this break of structure here, so probably if we go down to the smaller time frame, we could identify some liquidity areas as well. You know, we have liquidity resting here, so price could come back from these areas to come and seek this liquidity resting here, this equal those liquidity resting here. That is if it wants to give us a reversal to the downside, but if not, we just follow it as it tells us. What it gives us, that's what we're going to be trading in terms of the direction. So currently we are in a bullish run, so we are almost at this level, this next key level here. Or is it a key level? Okay, I put the high of the week here, so we could identify the next key level is 750, which is just above this weekly high for last week. So we could push the next key level or beyond. So in whichever way, we just target that. So let's further refine these areas and see if we can identify any place that price could be drawn to. So on the weekly or daily time frame where we marked as our demand zone, we can now refine it to this particular one here. So on the daily, we can identify that there's also some amount of or some imbalance sitting right here that we had price tapping into it partially. So that wasn't a full fill, it was a partial fill. We had price tapping into 50% of that imbalance there. So we are on the 4-hour time frame, and then we took off from there. So looking at it, yeah, there on the 4-hour time, you can identify some areas of imbalances along the way. So before we even continue, we have this zone. This should be a pending area. We have, if price will come back, there's still some area that needs to be filled fully. So this was a partial tapping that hasn't fully filled, so it's a likely area that we could consider. And earlier on, we also identified this area as a liquidity resting here as well. So we could further refine this zone. So we did it on the 4-hour time frame, this on the 1 hour. So on the 1 hour, we can tackle this particular candle here. We can take this particular candle as our area, and then we can also see this, the fair value gap or the imbalance extends from there to there. So it's an area to draw price into. But that is not our focus. We focus on what price is telling us as the market opens, and then we'll deal with it. Also bearing in mind these key levels that I pointed out earlier on. Okay, so yeah, this is how we do it. Let's go to 15 minutes. So all we have to do is just keep on refining these areas so that we'll get a better risk reward zone. So on the 15 minutes, instead of having this wide area that we have been refining, we can reduce this zone all the way down here to this area. So at the furnace, from this point on, as our demand area, we hardly can see any imbalance. The only imbalance we can identify from this point on is from here. I think here, this is some form of pending area that needs to be tapped in. It looks like we had a slight tapped in, but it wasn't filled. It's still open. This is still an open price range. I know sometimes it's the area is as good as one tap in. So if you have a one tap in, that's it. But you never know. We still have to mark those areas, and then it's a potential area that price could be drawn into. Here I think there's no imbalance here. So we have this internal range of liquidity, these imbalances resting below here as price makes its way up, as price has made its way up. So I believe this is clear. So this is how you keep refining until you get to your trading time frame. So on the 15-minute time frame, you have these areas that you could be targeting price to come for a revisit to fill these areas. Then from there, you look for your entries from these zones that you have marked. So in that way you are not taking your trades anyhow, anywhere. You have marked specific areas that you want to take your trade from. So all you could do is put your alerts in these zones. As price revisit there, you look out to take your trades from there. Okay, so I believe this is clear enough. Let's see. Yeah, so as I said, we are almost at the 24,750 zone. 24,750. That is the next, from this point on, that is the next key level we can target. Where are you? 750. Yeah, so this zone is the next key level. So what I'm doing here, the same goes for US 30 and US 500 SPS. Yeah, so if you look out for these same levels, you will see that price reacts, or they don't just take a ride over it. Once it gets there, there's a high chance or high probability we get a reversal. So once you see any kind of rejection from this level, you could play along with it. So from where price is, we can this is on the 15 minutes, so we have this area here as a pending zone. So demand, and then attached to this demand we have imbalance, also imbalance as well. Yeah, so we could have price revisiting from the open, because we are already at this, we are here now. We've seen some form of rejection, that we could have price coming back to revisit here, and if it wants to go up, it targets the next key level, the next key level. So this is how I see NAS for now, for this coming week. So depending on how long this takes to play out, but from here to here, let's see what is the length and breadth of it. So from here to here we have about 243 pips. From this point to this point, 243 pips, or perhaps price could just take off from here to this next zone. This next zone, that could also give us about 119 pips, which is good. All right, so that is on NAS. I believe it's clear enough. As also the next scenario that I was saying is, or the next narrative we can pick out is, we can also see that we have equal lows here. We can also identify equal lows here. So there's a high chance, or there's a chance, that we could revisit to clear out the liquidity resting here before we continue the uptrend. So these are the scenarios that we have built around the symbol. So all we have to do is be on the watch out and see which one plays out, and then we take it from there. As I said, I'm not here to predict anything. What I'm doing is just giving you multiple scenarios or narratives of what is likely to happen. So whichever one of them happens, we go along with it. We make money with it. No stress, we make money with it. Okay, let's look at BTC. Let's look at BTC. Somebody said, can you change your moving average to 50? Yeah, I prefer to use the 20 moving average. I prefer to use the 20 moving average, as it's as my, like, if I'm on the 15 minute, if I look at price is above the 20 moving average, it kind of gives me a guide. Even if I don't go on the higher time frame, seeing price above the 20 gives me a trend direction where price is likely to move in that particular moment that I'm looking at it. So that is how I have the 20. That's why I have the 20 on my charts. Okay, so let's look at BTC. So BTC, let's see what it's been doing. Okay, this on the weekly time frame on BTC, and then as we can see, looking at this data from this data point here, we can see we've been making higher highs in an uptrend, moving up to the upside, making higher highs. Okay, so we got to this level. See, we had the break of structure here. So once we have the break of structure, the origin becomes our zone of interest. So with this break of structure on the weekly time frame, I know we are not trading on the weekly time frame, but it's what we are doing here is fractal formation that happens on any time frame that you can be using or you'll be using. So this, if I don't tell you that this is a weekly time frame, you could be you can mark it and then just wait for price to come to that zone. So even on the weekly time frame, this is our zone. This is the zone, the demand zone we can mark on the weekly time frame. So that is the last indecision candle before the push up that caused this break of structure. Over here it says a change of character, but it doesn't matter whether break or change of character, there is a break. Whether a change of character or break of structure, there's still a break. So it doesn't matter. So we just put the change of character there just to tell us that we're initially moving to the downside, and now we have changed our attitude, we've changed our direction to the upside. That is why we put the change of character there, just to make us aware what has happened. So this is the first break, and then the origin is where I've marked. This is the last indecision candle before the move that caused this change of character on the weekly. So as I said, we don't trade the weekly. We don't trade on the weekly, but we just using it as a means to have a kind of range where we could be targeting if we are doing a weekly kind of analysis, where we could be targeting from. So I was on this area that we had this equal highs created. And what happened before we had this push down? Price took out the liquidity resting here. See how it went above this previous high, took the high, and then what happened? Boom, started the selling. So if you identify these areas, you are more likely to make some money rather than you becoming the liquidity that price will come to seek. So before you get into it, just make sure that you have identified the equal lows, equal highs, and liquidity possibly have been taken from that area before you engage. So now we have this played out to this level, to this zone that was marked here some time past as imbalanced demand zone. As I said, this is a weekly time frame. So if we zoom into the smaller time frames, we could see where why this is marked as imbalanced demand zone, and that's exactly where price came to. Even on the weekly time frame, price came to this zone and then turned around. So turning around, we can see on the weekly that we have had let me do this. We've had this high taken out by the last week's candle, which is a bullish engulfing candle. So we have completely engulfed this previous purple candle, even on the weekly. So me saying this here, anything that's any pullback to this zone, it's a gift play. It's a pullback for us to push further up. So this on the weekly time frame. So let's go down to before, as I did on the other one, let's mark the high and low of the weekly as well, just for us to make the know the previous week's high and low, to give us some form of range. Okay, so let's clear this as well. Let's clear this. Okay, let's go down to the daily time frame. So on the daily, we can see let's check. Okay, on the daily we can see that we had this area that we marked on the weekly time frame. So price is currently in this zone. Price is currently in this zone. So if we see the low of last week, the low of last week's movements, that's where price came to. Let me take out this. Yeah, price came to the low and then pushed up, made this high, and then turned around again, gave us a bearish engulfing candle on the daily time frame. So from this point on, we've had this move here, indicating that we want to move down. This is a bearish. We've had some rejection at this level. So let's look to the left. Why price is being rejected here. So we had this sweep of liquidity here. Then we've also been given a change of character. So we initially was indicating to be going up, and now we turned round to the downside. We had a change of character. So with that change of character, that's where we have to see if we have truly tapped into. So that change of character, we will put it, let's say we had the initial change of character here. This is a low point that was created before this push up. This is on the daily time frame. So if we say we had a change of character here, then the origin is, I will say here, because we had this consolidation area here. So this was the last indecision candle before this push down that caused the change of character. So we can now say this is our supply zone. That is our supply zone. So that's our supply zone. So before this move, price came back to this area. So let's say all this hasn't happened. So this will be our supply zone. So with this supply zone, we had also this imbalance attached to it. We had this imbalance attached to this supply zone. So we're just focusing on this area. I know I've put on these markings in the past, but let's focus on, let me just remove, because this is no longer needed. maybe until later on. We don't need that as well. So we have this imbalance supply zone here, and that is where price came to tap in first time, push down, caused some breakup structure, and then we're having a revisit to this area. So above here, looking at the daily time frame, we can't see any area or any inefficiencies above here. So prices come back to this zone, imbalance supply zone, tapping into this zone, and then looking to head back down. We've already had this indication. So let's do further refinement and see what we can see on this further refinement. So that is why I was saying that it's always good to mark your zones and be waiting patiently there for your entry. So if you had already marked this zone before all this happens, and price getting here giving you this rejection in the zone, you are more confident taking a trade from here than anything. You are more confident to take a trade from here. So now, as I said, we've tapped into this zone. So where is the likely area? Where is the likely area? So I can see we've created these liquidity areas there, that all needs to be consumed. So these are all liquidity areas that could act as a magnet to try to pull price to clear the liquidity sitting right here. So below this area, below this liquidity zone, let me clear the charts again. So below this liquidity zone, we can see here, below this liquidity zone, what we can do is also identify any imbalances. So if I take this out, we can identify some imbalance right here. This is on the 4-hour time frame, I guess. Yeah, so we can identify these imbalances here as well. So in our move up, we cause this break of structure, this imbalance here. So if anything at all, we can, these are all zones that price is likely to come back to revisit. Let's take this off. These are all zones that price is likely to come back to revisit. We can also identify some imbalance right here. So these are all pending zones on the 4-hour time frame. The last indecision candle before the push up, I'll put it to that candle. So we have imbalance demand zone here. So there's a high chance we could have price, as it's already given us an indication, could have price coming back to clear this imbalance, also revisiting this area, and then we'll see what happens from there. We'll see what happens from there if it wants to turn around and go to the upside. But currently, this is what I see price doing, coming for this liquidity resting here. So this on the 4-hour time frame. If we go down to the 1 hour, we can further refine these zones. To that, and then we have this imbalance. We have imbalance here, and then we can also identify some imbalance right next to price here. Right next to price here. Yeah, so this is how I see on BTC currently. I can identify the imbalance here. So we could have price coming back all the way to consume the liquidity resting here before deciding to continue the uptrend, or we can have price coming back to consume this liquidity resting here just below there. So mind you, this is the weekly low we had last week as well. So we could have price coming back, revisiting the weekly low, clearing out the liquidity resting there, and then make its way back to the high of last week. So from one liquidity area we move to the next liquidity area. So this is how I see on BTC. So all we have to do is wait and then see how it plays out. So from here, this is the likely area that we could identify price coming to. Yep, I believe this is clear enough. Is that clear? Oh, we've already gone past the hour. Yeah, today I started a bit late, 3 minutes late. So in any way, is there any question, anything you want me to quickly have a look before we sign off? And I believe this week we're going to have a fantastic time as well. Last week we had a good time. Yeah, so we follow the same process over and over again. So in going through this, just want to draw our minds onto three things that we should be always mindful of. So the three pillars that we can always look out for in our trading journey is one is the strategy. Number two, you have to look into your psychology. How you can manage your mental capital. And taking trades at the right areas or zones before the trade takes off. So if one thing that we as traders we are not careful of, we take the wrong trades from the wrong zones or wrong areas, locations. By the time the actual trade is ready for us to enter, then we'll be very low on mental capital that we don't even want to trade anymore, because we've already taken so much out of ourselves. We have allowed ourselves for price to deal with us so much so that at the time that the trade is actually ready for the takeoff, we will not even be in the mood to trade. So we have to take our psychological aspects very serious. And the next and most important, also very important, is risk management. So I'm talking about the three pillars that we can look out for: the strategy, your psychology, and risk management. Risk management is where you should know, as a trader, I want you to be more of risk first mindset. You should have a risk first mindset, that before you even go into a trade, you have to ask yourself how much you are willing to risk upon that particular trade. That if that trade, yes, we've put these levels here, so we've said that we've planned or we've identified these as our possible zone to take the trade. So let's say we put our buy entry here, our stop loss goes here. So this is the risk that we have accepted. So you ask yourself, should price not play out the way I anticipate it to, and then it comes to take me out, am I willing to lose that much? If you are not willing to lose that much, then reduce your lot size until you are comfortable with that particular size you have put in. Until you are comfortable with that size. So what I always say is you go in for 2 to 1. So if you are risking this amount in this particular trade, you could go in for 2 to 1. So you risk 1 for 2. You risk £100 for £200. So that's 2 to 1 risk reward. As I said, we have to be risk first minded. We have to have a risk first minded attitude in every trade we take in. You are supposed to protect your capital. You ask yourself those questions that I've told you to ask yourself. Reflect on it. Okay, somebody says, what time frame is best to enter? Okay. Yeah, it depends on what type of trader are you. If you are doing a swing trading, some people, you can take your trades from 1 hour or 4 hours even, if you are doing a swing trading kind of. Or if you are doing a day trader, if you are a day trader, for me, I can go down to I can go down. Let me finish this statement. I can go down to 5 minutes, 2 minutes to enter my trade. As I said earlier on, these things are all fractal formation that happens on any time frame. So once I've identified my bias, where I want to trade, the direction I want to trade, with the confirmation from the 4-hour time frame, I can wait on the 15 minutes, on the 5 minutes, or on the 2 minutes if I so want to, and then take my trade from there. So long as I'm in the zone, I can zoom into the 2 minutes and then take my trades from there and then to the upside. So long as this is playing out in the zone that I've marked. So what I want to see is a confirmation from that zone. So once I get a confirmation from that zone, if it's on the 2 minutes, fine, I get into the trade. If it's on the 5 minutes, I get into, but it doesn't really matter that much. What you have to do is to make sure to get your zones correct, and then if you get a confirmation in that zone, that is all you need. Because at the end of the day, whatever analysis you make, you don't really know what will happen. No matter the analysis I make here, I don't really know what will happen. That is why I go into a trade, I have to have a risk first mindset, that I'm going into this trade despite the fact that I've done all this analysis, I'm still not certain on what will happen. So that's why I put in that I'm willing to risk this amount in case it doesn't play out as I have put in. Yeah, so that is the mindset you should have, because if other than that, and then you get so attached to any particular trade, it can really get you down, because you now become married to that particular trade. You should have a very nimble kind of attitude where you are not attached to any particular trade. If price gives you, like we are in an uptrend, we've gotten to this weekly high that I've put on the chart here, and then I have indication that we're going to the downside. I have first push, first try, price failed, gave a second leg, and then I have a bearish engulfing candle. What else do I need to wait for? All I do is take my trade and then put my stop loss above here. If it works, fine. If it doesn't, fine. I followed my plan. I followed my game plan. Yeah, so that is it. I believe that answered your question very much so. Okay, if there's no other question, I believe we'll end today's session here. We've already gone past 20 minutes above the entry. Okay, all right, so if you're here, you haven't subscribed to the channel yet, just click the subscription button. Alright, so next time you get a notification that we are live, and then you can join us as well. Alright, on that note, I wish you all the best coming this week, and then happy trading and have a good time this coming week. And then just one thing also, always know what's news is coming up. If it's a high impact news, just try to avoid trading around that time. Just wait for price or the news to be over, then it will be a good time to look out for, rather than going through all that shenanigans that could happen. All right, happy trading, guys. Thank you, and thanks for joining me today. Hope to see you next week. Until then, bye.